Welcome back to the deep dive. Today we are digging into something that frankly exploded over the holidays. We're talking about silver and its transformation from, just a precious metal into maybe the most critical, most stressed commodity on the planet.
It really did hit a fever pitch. We're looking at the shocking record high silver reached on December 26, 2025. It touched $79.11 an ounce.
That number, it's not just interest, it feels more like panic buying. The sources show an absolutely explosive climb. I mean, over 10% in a single day.
In one day. And if you zoom out, it's a 48% increase in just the past month.
And the year-over-year figure is just staggering, gains over 169%. This wasn't a gentle curve, it was a vertical line.
And what's so fascinating here and what the data shows is that this isn't just speculation. It's a perfect storm. You've got these long-standing market deficits. We just aren't mining enough. Then you have this massive, indispensable industrial demand. And then, wham! Both of those factors just collided with a huge and frankly unexpected policy shift out of China.
So let's frame this for you. If you're in manufacturing or tech or even just watching the cost of the green transition, our mission today is to unpack the why. Why this metal, which most people think of as, gold's quieter sibling, is suddenly at the absolute center of everything.
And to get there, we have to start with the spark. The one catalyst that took this from a niche commodity story to global front-page news.
Okay, let's unpack that. The market was already tight, but what was the first real sign this was becoming a global event? And that brings us to what some are calling the Musk factor.
Precisely. The data was already pointing to stress, but it was Elon Musk's post on X that just amplified it for everyone. His message was so simple but so urgent. He just wrote, "This is not good. Silver is needed in many industrial processes."
And when the CEO of the world's biggest EV maker says a core component is not good, the market listens. It forces that aha moment, I think, for a lot of people about where silver actually goes.
And the sources make that demand just crystal clear. That's connected to your world. An EV, like a Tesla, needs anywhere from 25 to 50 grams of silver. It's all through the battery management systems, the electronics.
And then on the green energy side, it's even bigger, isn't it?
Oh, solar is a massive consumer. A single solar panel uses 15 to 20 grams. Now multiply that by millions of EVs and hundreds of gigawatts of solar. You see how quickly the supply just vanishes.
But the obvious question is, if silver is suddenly $80 an ounce, why not just switch? Why not use copper? What's the barrier there?
That is the conductivity constraint. And it's the whole reason we call it a strategic metal. Silver is just better. It has the highest electrical and thermal conductivity of any element. Better than copper, even better than gold. So in these high-stakes applications, like an EV battery or a solar cell, using anything else means you compromise on performance.
So it's like trying to run a race car with cheap spark plugs. You just can't do it and expect to win. That 1 or 2% drop in efficiency isn't acceptable.
Exactly. The demand becomes inelastic. You have to have it almost no matter the price. And this price shock, it wasn't a surprise to analysts. This peak aligns with the 5th straight year of a structural market deficit.
And that deficit is now showing up as physical stress, right, in the warehouses.
It is. We're seeing inventories at major exchanges like COMEX in New York just trending down, down, down. There have been huge physical withdrawals recently. And when the physical metal gets hard to find, that's when you get panic.
Which sets the stage perfectly for the next shock. So the supply crunch was bad enough, but then came the regulatory hammer from China.
This is the accelerator. China is bringing in these strict new export licensing rules for refined silver, and they start January 1st, 2026. This isn't just red tape, it's a strategic policy.
And what are the specific rules? What are the barriers that have the futures market so worried?
There are two very high thresholds. First, a company needs to prove it has at least 80 tons of annual production capacity. And second, they need credit lines of about $30 million.
Wow. Okay, so those numbers sound like they're designed to push all the smaller players out.
They're absolutely designed to do that. They'll likely disqualify a huge number of smaller refiners, the traders who move a lot of this metal around the world. The stated goal is to redirect that supply to China's own domestic priorities, and they say this will last through at least 2027.
The sources mention this feels a lot like what China did with rare earth elements a while back. For anyone who remembers that crisis, what does that signal?
It signals a very serious intent to control a strategic supply chain. When they did that with rare earths, prices went through the roof, and Western countries had to scramble for alternatives. By doing this with silver, China is essentially declaring it a strategic material. vital for their own goals in EVs and solar.
And it has such a huge global impact because China's role in refining is just dominant.
It's dominant. They don't mine at all, but they process 60 to 70% of the world's refined silver. So if you restrict that flow, you create an instant global crisis. The big risk now is divergent pricing stable prices inside China for their manufacturers and hyper-volatile expensive silver for everyone else.
So we've got irreplaceable materials, stalled supply, and a regulatory wall. Let's step back and just look at the raw numbers here, the core supply-demand problem.
The structural deficit is just massive. The data shows global mine production has been basically flat. It's stuck at around 1.01 billion ounces, but total demand has soared to 1.24 billion ounces.
Wait, if the price is up 169%, why aren't miners just opening up new projects left and right? Is the price still not high enough?
It's not about price, really. It's about geology and regulation.
Yeah.
The output is flat because existing mines are getting old, which makes them more expensive to operate. And getting permits for a new mine is a 5 to 10-year battle against environmental regulations. Today's high price doesn't solve a 10-year problem.
So that 1.01 billion in supply versus 1.24 billion in demand, what's the actual deficit for this year?
The projected deficit for 2025 is 117.6 million ounces. And to give you some context for that number, that is roughly the entire annual silver demand from the global EV industry. So we are short one whole major market every single year.
Can't recycling help bridge that gap? With prices this high, people must be pulling silver out of old phones and computers.
Recycling does help. It provides a cushion of about 200 million ounces a year. But 200 million ounces can't fill a gap that's still over 117 million ounces wide. And, getting silver out of complex electronics isn't easy.
This data just confirms that strategic shift we were talking about. This isn't about coins or jewelry driving the market anymore.
Not at all. Industrial uses now account for 50 to 60% of all silver demand. It used to be photography and silverware. Now it's the green energy transition and high-tech manufacturing. They are the new unforgiving drivers.
Let's focus on those industrial drivers because this explains why the high price is so sticky. This demand isn't going anywhere.
It's accelerating. And there are three key sectors driving consumption to historic highs.
Okay, first up is solar, the biggest industrial user.
Right. Solar photovoltaics are about 20% of all silver consumption. And that demand just keeps growing as global installations are projected to hit 400 gigawatts. This forces manufacturers into a kind of tech arms race to use less of it.
You're talking about thrifting, a term I've seen a lot. For anyone who doesn't know, what is thrifting?
Thrifting is just finding ways to use less silver per panel without hurting performance. So using ultra-thin layers or even nanoparticles. And they've gotten incredibly good at it over the last decade.
But the paradox is, even with them getting more efficient, the total demand keeps going up.
Absolutely. The sheer volume of new solar panels just outweighs the savings from thrifting. You might use 10% less silver per panel, but if the world installs 40% more panels, your overall demand is still way up.
And then there's the EV revolution, which is just pulling tons of metal out of the market.
Yes, demand there grows right alongside vehicle production, which should hit 17 million units in 2025. Remember, that's 25 to 50 grams times 17 million cars. It's huge.
And finally, there's the digital backbone of our world, AI, 5G.
Exactly. Electronics, 5G, AI, data centers, that whole sector is seeing about 20% year-over-year growth. Data centers need these superconductive circuits. Miniaturization in our phones relies on silver's properties.
So when you take a step back, the conclusion is pretty clear. Silver isn't a nice to have. It's a need to have. It's a strategic metal.
It's completely strategic. Because of those physical properties, no other element is number one in electrical conductivity, thermal conductivity, and optical reflectivity.
Right.
If you're building a solar farm meant to last decades, or a supercomputer, you just can't compromise on that.
So the picture is clear. Huge demand, tight supply, and now geopolitical friction. Looking forward, what are the impacts of China's policy? And are there any mitigation factors? Can anything bring stability back?
Well, for Western manufacturers, the vulnerabilities are severe. And the problem is worse because the US and Europe have very little of their own refining capacity. It adds another layer of dependency.
And the potential cut from China could be staggering.
It could. A 50% cut in Chinese exports, which is a real risk here, could widen that global deficit by thousands of tons. And that means huge cost pressures, maybe even bankruptcies for smaller companies, and big delays for green energy projects.
Are there any silver linings? I mean, what mitigation strategies are people trying?
There are efforts, but they're all long-term. More recycling is happening, there's new investment capital flowing toward mine development, and all that research into thrifting will only accelerate with prices this high.
But all of those things take time, right? They don't fix the problem tomorrow.
That is the crucial point. The sources say the timeline to implement these offsets, whether it's a new mine or new panel technology, is often 12 to 24 months. So for the next 2 years at least, manufacturers are just exposed to this extreme volatility.
So as we're all watching this, how do we track if things are getting better or worse? What are the key indicators to watch?
I'd say watch three things. First, COMEX delivery notices. That tells you if real physical metal is still leaving the warehouses. Second, watch the premiums on the Shanghai market versus London or New York. If Shanghai is much cheaper, it means China's policy of prioritizing its own industry is working.
And finally, the long-term picture.
Right. Track the quarterly reports from groups like the Silver Institute. They give you the best unbiased look at the global supply and demand fundamentals. That tells us if we're making any progress at all on closing that huge structural deficit.
So this deep dive has really shown us that this silver surge isn't some speculative bubble. It's the direct result of an essential metal's unique properties meeting years of deficits, now kicked into overdrive by geopolitics. We'd really have to stop thinking about it as just a precious metal and start seeing it as a critical component for the future economy.
The main takeaway is that the green transition depends on a handful of key metals, and silver is now at the very top of that list. So if that essential metal is now being managed like a strategic national asset, mirroring the old rare earth strategy, the question for all of us to think about is, who really gets to control the pace of global sustainability and innovation for the next decade?